How's it going, everyone? It is Tuesday, May 14th, 2024, and let's get right into the video for today. I called out RTX as a day trade long yesterday, so let's take a look at what happened with RTX. So we're going to put the market in the background as well, and we can take a look at what happened over here. So we had this gap up in the market, we filled it in, kind of a choppy move, and we broke the low of the day, came a little bit higher, broke through again. So we had this kind of weak, bearish trend day for most of the day, and then we died in the last couple of hours. So we had a slight downward bias. When I was looking at RTX over here, we knew that our intraday bias on the market was a little bit more neutral at that point. I thought the market would find some support here and start to go higher. But when it couldn't get any lift off, you know that sellers were pounding the ask and we were going to go a little bit lower. With any case, even though it's a weak bearish trend day, there can still be some really nice pockets of relative strength. You just have to know where to look for them. So I loved RTX in the open, and the clue with RTX, in my opinion, is on these stocks that go parabolic, they test a bit and we move up higher, you got to enter very early in the day to get in on the move. So when I called out RTX, I was somewhere over here, and it was still looking really good. But I expected that this day to kind of die on the vine. I didn't expect a weak bearish trend day, but I expected this day to die and RTX to kind of pitter-patter out around 11:30 to 1:30. That's usually when these strong moves tend to lose steam and come down. So I was waiting for the pullback, and I liked this uptrend that we had in RTX over here. And I wanted to see a bounce off of this channel. If I were to draw it somewhere, let's call it here. Right, we had some channel here, which I drew terribly. Let me just do this line here. So then we had this channel. So I liked everything I was seeing in RTX, and at 11:25 we got this reaction candle here, which I liked, and I had an order out earlier, but then I actually pulled the order because the market was getting a little bit weaker than I would have liked, and I thought RTX could come down a little bit. So I still liked RTX pretty much until this 11:45 candle, which broke VWAP. That I did not like. It tells you the selling pressure is pretty heavy, and it's losing relative strength to the market and actually becoming relatively weak. At 11:45, the market's not really doing anything, but RTX has been tanking. So this tells us that there is some selling pressure in the stock. So all that exposition is to say that RTX was a no trade. I didn't quite get the opportunity that I wanted to trade this. The market didn't pan out how I wanted to. The stock didn't pan out how I wanted to. And I didn't jump the gun chasing the high of the day on this sort of stock. First warning sign was this bearish engulf. Not the end of the world, but you want to be careful. And you want to see this erased, right? We got this bearish engulf, erased, test, taking up higher, bearish engulf, and then we got followed through, closed below the 8 EMA. We got a flat bottom HA candle. All these telling us that a relative short-term high is in. And this move ended up really retracing all of the gains from the open. So we avoided a big loss by being patient and just trying to wait for the market conditions and the stock conditions to line up, and they never quite did. So RTX, no trade, happens. This is a good lesson in just kind of waiting for the opportunity and also knowing some of the setups. This was a nice grindy stock, and you want to get in on something like an HA reversal. That's what I had my alert set for, and I got the HA reversal at 1:30 over here, and clearly I was not going to buy the stock at 1:30 after seeing a move like this. Okay, let's take a look at our open positions. So first one is Tesla. This guy has been a dog, absolute dog. We'll go to walkthrough yesterday. I took Tesla short around here. I hated the strong move up. This was a huge warning sign. I liked how we came back over here, tested 50 SMA. We're kind of holding the gains here, so I like to see that in the stock. Today, though, the market is pretty flat and the stock is rallying up. So not a huge fan on that. I wanted to see that in a flat market, this stock would come down and retest this level. That's what I expected. This tells me that the buying pressure is just a little bit too strong in the stock. I'm looking to take a good loss on this at this point. I think I was completely wrong about this bias, and you can see on the daily chart how we poked through. This was looking fine yesterday. I like this hold of support, and we needed to get that next leg lower today. We did not. We did not get the next leg lower. We're testing. We filled in this gap. We're testing the A, VWAP, E. We're above this horizontal level. Not crazy about Tesla. Other thing here is these cycles. Here are the cycles in the stock. We broke through this sort of downtrend over here. After this pullback, we needed this to be a weak bullish cycle and then a next leg lower. So instead of this, we should have seen a move down over here. That's what I want to see in the PDS. I like seeing the M15 charts in the PDS. It'll help me gauge the cycles over a couple of days. So Tesla's not doing what we wanted. How can we take the highest probability loss? What is the best loss we can take in this scenario? So there's a couple things into play, and let's go over the market conditions first, because what's going to happen with the CPI is going to sort of set the stage for Tesla. Let's look at the D1 chart first, get our bearings, and then we're going to come back to Tesla and GE, because in this situation, I think the CPI number tomorrow is going to help gauge the risk reward. So D1 chart over here, again, strong move up in the first few months, the last couple months of the year, first few months of this year. We got that pullback in April. It was a little bit deeper than we wanted to. Hit the 50 SMA. So far, the move up has been okay, not the best, not the worst. We digested all the news. We're rallying up. Again, our long-term bias is a 1. We are a 1 bullish. We're waiting to see what happens at this juncture, and I think we're going to get some information this week or next week where we're going to go. That's going to be the main thing next week. So I'm expecting within 2 weeks, my market lot bias long term is probably going to change. Short term, I am bullish. I'm a 1 bullish. I think I like this move was This move has been decent. I like the tighter price action. The volume has been low, and we are compressing near the all-time high. So we need to think of the scenarios that could happen here, like I mentioned in the video yesterday. The bullish case is that we get a bullish CPI number and we break out of this level, new all-time high, and we resume this longer-term uptrend, just perhaps not as gangbusters go-go as it was before. It'll probably be some sort of stair-step rally where we go up, pull back a little bit. That's when you enter the trades after the pullback, and then we go up again. The other scenario is that we have a very strong rejection, another gap up. We had gap up tests all-time high, big bearish engulfing candle from that high. That tells us that resistance is in, at least for the short term, the intermediate term, for this foreseeable few months, until the next catalyst for the news. That's the other scenario. The third scenario is that we hit this all-time high and then we compress here for maybe another, 3, 4, 5 days. We can't really get anything going to the upside. The market just chops around. And this would happen if the CPI just happens to, I think, to really fall in line with expectations, doesn't exceed too much, doesn't come too hot, doesn't come too cold, comes in at a Goldilocks number. The longer we compress here, it means that this rally has waned and just buyers and sellers are not really able to get anything going on each side. And we have to respect this move a little bit more than we have to respect this move, and especially the price action on April 4th. So those are the 3 scenarios that I see. I'm not taking a ton of trades right now in terms of swings. I'm keeping it to day trades, and we're waiting to see whether we break out of a direction. We have 1 short that we're going to close, and we have 1 long swing that we have in GE that's taking some heat. Based on what we see in the price action next week, that'll tell us what side to favor. If we break out, we can add to these swing longs. If we compress for a while and GE is looking pretty weak, I'm probably going to exit the stock for a loss and just get to the sidelines in cash. If we break down, then I'm also probably going to exit GE. It would also probably be a loss because the stock is taking some heat. So that's how we use the market scenarios to determine our game plan. So now that we have those bearings, let's go back to Tesla, and then we're going to get back to the M5 chart for today, which I'm already in. So Tesla right now, we are down about 10 bucks, but because we have a PDS, we're limited. So if I check what my PDS is right now on my account, I am probably down close to, not at a max loss, but probably down close to a max loss at this point. I got the spread for $2.20, and I am at about $1.70. So let's call it about 75% down. So because my loss is max, I only have a 25% downside loss here at this point. So if the CPI comes down, I'm only risking 25% now. If the CPI comes bearish, right, and it pulls down the mega cap tech stocks with it, Tesla has a good chance of going down. So my risk reward in this scenario actually favors the downside in this stock. I still have a couple of days for Tesla here, and I still have a bearish CPI potential reaction. So assuming this is let's assume this is a binary event, it's a 50-50 chance. At this point, now I'm risking, 50-50 chance of a 25% more loss, or potentially a 25% more win, or greater win. I can't say exactly how much the percentage is, but now the risk reward essentially favors the downside in this scenario. So if you were to ask me what percentage I feel like CPI is going to come bullish or bearish, after the PPI report today that came in a little bit hot, my inclination is that the CPI is also going to come a little bit more bearish. So I'm kind of expecting a hotter scenario here. And if that does play out, I think Tesla is going to crack down. Is it going to be a winner after that? Well, it's going to depend on the price action that we see from Tesla, the price action we see from the market. If we get that long red candle here, we still have a chance for this to become a winner. But if we kind of dilly-dally around for the next couple of days, Tesla comes down a little bit, then we just look at a loser and try to take the best possible loss. So this is a key point, I think, in setting an expectation. If I look at the setup for Tesla, I like the setup, I like the entry. I thought it was a pretty good trade, and then I had an expectation of what I wanted the stock to do in the next couple of days. I know these debit spreads usually produce in 1 to 2 days for my winners, and if it is a loser, it usually will come back down for some retest. This is a bigger move than I would have liked. So I know my setup is good, I know my entry is good. The trade did not do what I expected, so I have to go to my loss aversion plan, right? And that will help determine how I exit the stock. A lot of times, if I see a move like this, I might say, hey, look, it's really, really going well. Or I might panic on this initial move in the morning and say, oh man, stack green candles, I gotta exit now. When you know that this stock is gonna move its cycles, it's gonna be choppy, you're gonna have to wait for the pullback. And even if you're really skittish, let's say you exited near the 50 SMA as it's finding support, maybe you get on this LRSI cross, you still save yourself a ton of money rather than exiting here. It's a $4 move that you save on the stock. So still be patient on your losers. Try to see what's the best time I can exit this loss and get the lowest possible loss possible. All right, so let's look at the market today. I talked about the compression of the D1 chart. That's going to be key. We have an inside day for the past couple of days. PPI came out hotter than expected, but didn't really have any net movement, which I thought was interesting. Usually when PPI comes out before CPI, some air is let out of the balloon, but CPI is a more watched number. There's the hot PPI report that came out this morning. There's a knee-jerk reaction, tested this level, and then we kind of grinded up higher, and we opened pretty much right at the close of yesterday. So nothing going on here. If you look at this price action, this is garbage. I mean, I wouldn't even put this garbage with my garbage. That's how garbage it is. All right, I'll keep my garbage. I would put it in the first class seat of an airplane, and I would have my other garbage all the way in the back in the last row of the section. That's how garbage this price action is. I wouldn't let it touch any of my garbage in my house. we're going nowhere, right? Like, look at this. This is back and forth, choppy price action. The good thing is there's a lot of volume, and Pete had a great point that because of this volume here, CPI is going to cause a move one way or another. I'm not too keen on trading this, and you got to be really patient. You got to have excellent entries and passive targets on your day trades. I don't think the market is going to help or hinder anything at this point. We do have a little bit of a wedge forming, so I'm going to draw this wedge right here. That's the first thing to notice in terms of the structure of the market. The second thing is also just the trade, or kind of the range that we're in right now. So I see this range somewhere like here. Here's the horizontal range that we're in. Try to break out, fail. Try to break to the downside, fail. So I think these failed breakouts do capture kind of what the range is like right now. A lot of choppy price action. So what I'd look for right now, 2 benign bear cycles, volume is coming down lower. Or sorry, 2 benign 1OP cycles. We had high volume and now it's getting pretty low. If we find some support here, we're at the low of the day with a 1OP bull cross. That's when I try to take some relatively strong stocks long. Get in on an LRSI alert. A lot of strong stocks that were strong in the first 2 hours of the day or 90 minutes, they're probably going to be pulling back right now. And you wait for them to find support, and you have an excellent chance to enter these stocks later in the day, right? After the first 3.5, maybe even 4 hours. It's going to take time, and you want to see some strong price action. You want to see the stock start to move under its own power. So let's go over a couple of picks for today. First one that I like here, and we still have to get a little bit more confirmation of the D1, but keep an eye on this, is DigitalOcean. It's breaking through some of these downward sloping trend lines. There's a lot of these trend lines coming into play from over here. So certainly some major resistance, but if they can get through here, I think it has a clear path to around 460. So not my top pick, but just something I'm keeping in mind. I do like the price action of the stock. Got parabolic, pulled back to VWAP, parabolic, pulled back to the 8 EMA a little bit. So you can enter on an HA reversal. I'd wait for an LRSI cross. I think we're going to see a little bit more bearish price action. FCX, really nice stock. This is a nice grinder and excellent D1 chart as well. Breaking out of this longer term compression. Beautiful D1 breakout. Nice volume, nice grindy price action. Compressing for a little bit here as the market's moving up higher. I'd wait for an HA reversal on the stock as well. It's getting pretty late in the day. I think it's going to start to lose steam in the next hour or so. So wait for the pullback. You may have missed your chance in the stock. Goldman Sachs is one I really like as well. Let's look at the D1 again on the long side. So pull back here, held the gains, and now it's breaking out of this compression. We have this channel here that's probably not super legit, I'd say right now. Big parabolic move, compress the gains, maybe move lower, and we got some orderly selling at this level, so I'd watch out over here. I was waiting for an LRSI cross, but looks like I haven't quite gotten it. We did get an HA reversal a couple of bars ago over here, so this is not a bad time to enter GS again, but wait for that 1OP cross here. I don't think the market's going to help or hinder this stock too much, but I'm not a huge fan of this move lower right here. Now on the bear side, I'm going to give 2 picks as well, as if the market is able to actually break out of the range. The first one that I thought was pretty decent was Donut. So pretty weak bearish chart, getting through this low, and I'll actually try this over here. A lot of support at this level that is trying to crack down through. So today it tested this level, and there's a lot of fighting on support. So for Donut, what I would do is set an alert at the low of the day. It looks to be kind of a pretty wide bearish channel on the M5. If I were to draw that here. There's your bearish channel. So we're testing this support level. This is pretty major. Once we kind of soak up all of this demand, I think we'll get some further selling from shorts. So nothing's setting up yet, but keep an eye on Donut. Now, Abbott is super nice. I think this may be my pick of the day here. Abbott long. Or not Abbott long, definitely don't go long. Abbott short. We broke through this low from April 17th, and we got a couple of touches at this point. Lots of volume on here, really steady price action, really like this. Now with Abbott, I want to be careful here. First of all, we have a nice grindy move. and we have broken through some major support. Usually when we break through this major support, we are going to see some sort of retest at some point. We're going to get pulled back into this level. So I'm waiting for this retest and to have a bear LRSI alert, because the retest is going to be decently strong. Buyers are going to come in. It's going to be very rare that we don't get some sort of pullback. So we're going to get some sort of pullback later in the day. It's really hard to, I think, to chase some of these moves, in my opinion, before the retest. Like here, I thought we could retest. Here, I thought we might retest, but so far we haven't been able to get off the deck. The key with this trend is once it starts to slow down a little bit more, then you want to be taking some profits. This could be the first sign of the trend reversal here on Abbott. So, 2 picks for the day. I'm going to say okay, I'm going to give GS as a day trade long and Abbott as a day trade short. Wait for the pullbacks in these stocks. I think also Schwab was pretty nice today as well. Yeah, Schwab was pretty nice today, so that's another nice pick here. Schwab is actually a little bit nicer here. Still has to pull back. Take a look at Schwab. I like Schwab a little bit better than GS. Actually the D1's not as great. See, it's hitting this resistance here. Yeah, not as crazy about Schwab. But pretty good. Pretty good. Yeah, Abbott short and probably FCX. FCX is too nice. FCX long on an HA reversal. That's how I would take these stocks. So FCX long, Abbott short. Again, both day trades. I don't think you should be really scaling into a lot of positions before the CPI number. That's it for today's video. Hope you guys found this very helpful. We're going to take a look at how these stocks did, whether we entered them or not, and if our situation's played out, and what the CPI number is coming like tomorrow. Thanks for listening, everyone, and catch you all in the next video.